or as tax professional. KnowledgeFinancial.com and by eMarket Enterprise by eMarket.com welcome you. We are here to let you know what you never knew or had before, or to refresh your memory about what you already knew. And in other way, we can say that we are here to bring you complementary information, but very accurate information, the right information to help you make informed decisions. Tax statement and documents you need to file taxes. Statements are on the way from employers, banks, stockbrokers, real estate investment firms, and others. Many now of these documents are coming electronically, so you need to be sure to double check your email and the accuracy of the documents when you receive them. The most popular form people receive is a W-2. This is the key form, and you need one from each employer you work for during the past year. The W-2 shows how much money you made, how much income tax was withheld, Social Security and Medicare, and any benefit, contribution, retirement plans, medical accounts, and child care reimbursement plans. That's all your W-2 shows, and you need one to file your tax. But sometimes some companies, they say you don't need one. Even if you got your last paycheck, you can just go to them to file your tax. But I will suggest you got your W-2 to file your tax, because it's much more accurate. You have more information in it than the last paycheck. Other form that you need to file taxes is a 1098. 1098 form for most homeowners. Mortgage interest is tax deductible. That's the good thing when you own a property. The interest that you pay on the mortgage, this is deductible. I love it. And this document will tell you how much you paid last year. Your lender is required by law to send you one of these forms if you paid at least $600 interest. Actually, your mortgage company probably won't send you an official IRS form, but a document of its own, designed that contains the same data. That means if you own a property, a real estate, a home, and you're paying interest, you're paying the mortgage, if you pay at least $600, you should receive a 1098, and that 1098 you need it when you're going to file your tax. Next form that you need is the 1098E. Are you paying back a student loan? A lot of people are. The interest on your education debt is reported on this form. Your lender must send you one of it. The interest totally is at least $600. If you're paying at least $600, you should receive a form 1098E, and this is deductible on the tax. You may be able to deduct your student loan interest and possibly other loan-related amounts, such as origination fees and capitalized interest. 1098E, that's what you need if you are a student or a former student, but you are paying your loans. You also need a 1099I and T if you earn more than $10 in interest on a bank account or a certificate of deposit. You will get one of these forms for each account. Don't dismiss this statement. If you reinvested the interest, tax law says you receive the income even if you didn't actually have it in your hand. And reinvested earnings are still taxable income. Make no mistake about it. 1099 INT. That's for bank account certificates of deposit. Even if you reinvested the interest you receive, it is taxable. You have also 1099 DIV. Earnings from individual stocks and mutual funds are reported on Form 1099 DIV. I'm telling you that I love them, me personally. This will show dividends and capital gains distributed over $10. As with reinvested interest, if you use the dividend or the distribution to buy additional shares of the stock or mutual fund, you still got to pay taxes on it. Remember that? 1099 DIV for people who have stocks, mutual funds. Even if you reinvested the dividend, it is taxable. However, the distribution and certain qualified dividends are taxed at the lower capital gain rate. Also, 1099B. If you sold stocks, bonds, or mutual funds like I did this year, you will receive a 1099B from your broker or your mutual fund company. This will tell you the number of shares sold, when they sold, and the amount you got for the sale. You will need this information along with the date you bought the shares and the amount you paid for them to figure out your taxes. 1099B for stocks, bonds, and mutual funds. You need that to file your taxes if you are an investor just like me. Also, the 1099G taxpayers who got a refund of state or local taxes in certain states last year will get this form. If you use those taxes as deduction on your previous year's federal income tax return, you will need to report the 1099G amount on this year. You don't have to worry about reporting the return as income. 1099K, if you receive payments, credit cards from the third-party payment, such as PayPal, Amazon, and eBay, you might receive a 1099K reporting those amounts. There are triggers for amount $20,000 in transaction. So not every person who receives such payments will get a 1099K. This income, however, is taxable and should be reported even without issuing a 1099K. This means you might have a business somehow, or you're doing business on Amazon or with PayPal or eBay. You need a 1099K when you file your taxes. It doesn't stay there. You also got the 1099R if you receive a pension or a distribution from individual retirement account, or the 1099R provides the details of these transactions. The form is issued by broker, pension plan manager, or the mutual fund company. You will also get the 1099R if you roll over money in the retirement plan, usually for 1K to IRA, which is individual retirement account. sometimes you change job and you just want to do a rollover, whether from one company to another company, you will receive the 1099-R and you need that to file your taxes. 1099 MISC, that's for self-employed individuals who earn $600 or more, should get a 1099 MISC from the employer. You should get a separate 1099 MISC for each independent job you had during the previous tax year. Also, Form 5498, any contribution made during the calendar year to any individual retirement accounts are reported on this form. The 5498 shows traditional IRA contribution that might be deductible on your tax return. Also, there is another one, we call it Form 5498 ESA. That's contribution for Konw education saving plans, formerly known as education IRAs. Previously were reported on Form 5498, but now is 5498 ESA. That's the money you put aside for kids to go to college. But these plans now are tracked on this statement, which is 5498 ESA. The youngster named as the account beneficiary should get a copy of this document. So since is the owner of the account, is the one going to send the copy, which is the 5498 ESA. Schedule K1, finally, if you receive money from estate, trust, partnership, or S corporation last year, you should get in the Schedule K1. Financialacademyschool.com and knowledge.financial.com are here to help you make informed decisions. By Market Enterprise, by Market.com, we thank you very much. Thank you for listening. See you next time for the next video.